Now remember, Asian equities cracked today with Japan's Nikkei really plunging over 6% in trades. The benchmark is now down over 21% from last month's 5.5-year highs. Uncertainty over the central bank's rolling back of stimulus kept the investors on the edge, with the Shanghai Composite Index also shedding over 3%, while the shares in Seoul hit a new 8-week low. Now, the Australian markets also nosedived to a fresh 5.5-month lows today. Reuters correspondent Serena Dayaram is right here with a detailed market wrap from there. Serena.
Well, Asian markets suffered another tumultuous day, closing in red across the board. The Nikkei closed over 6% lower and is officially in bear market territory. The index is down nearly 22% from its high on May 23rd. Despite this, Nomura has in fact raised their year-end forecast for the Nikkei to 18,000, but the risk-off sentiment has led investors to traditional safe havens. The yen and Japanese government bonds are in fact higher. And if you look at the forex market, things aren't looking great for Tokyo stocks either. The dollar-yen broke below the key 95 handle. Investors are also pulling out of emerging markets, which are seen as risky. The Philippines and Thailand are hardest hit by these outflows, down 5.4% and 5.5% respectively. Elsewhere in Asia, Chinese shares took a beating. The Hang Seng closed at its lowest level since October, down 2.2% at 20,887 points. And in central bank action, the Indonesian central bank surprisingly hiked rates, while the Thais cut rates and the South Koreans left rates steady as expected. With regards to the RBI's policy meeting on Monday next week, Peter Elston of Aberdeen told us earlier that it's going to be almost impossible to cut rates because of currency weakness. His expectation is that most central banks will be thinking of how to quell these inflationary pressures as a result of weak currencies. And that's your wrap of the market action in Asia.